I mean, some of the things that are going on in the industry, I mean, it's every year is a little bit different. There's positive things and negative things, and I guess everybody always tries to figure which is going to win in that overall fight. One of the things when we look at the potential price impacts the market's going to have, to me, I always go back to supply and demand. Ultimately, go back to the consumer, and the consumer in the United States, according to USDA, is consuming more potatoes now than they were, the last 2 years. Both 2 years, from 2011 to 2013, both years we saw an increase in the quantity of potatoes on a per capita basis for both processing and fresh. A 1-year blip, to me, I don't get too excited about, but to see 2 consecutive years like that, that's positive, and that works out to somewhere between a 5 somewhere between 5 and a 6% increase in the per capita consumption. Is that a trend that's going to continue? Well, we won't know. But it certainly is better than the long-term declines that we've seen for quite a number of years. Europe had a weak crop in 2013, so they didn't have as much to export, and we were able to cover some of that. The issue gets to be, are we going to be able to maintain some of those markets that we've captured on that processing side? And one of the potential weaknesses that's going to maybe hurt us in our ability to do that is the stronger dollar. Basically, a strong dollar hurts our exports, but it helps our imports. And so from a consumer standpoint, having a strong dollar, they may like that because of all the manufactured goods that we bring in from overseas, China being one of the major suppliers. That makes some of the prices of those goods relatively less expensive. But when we're trying to move product like potatoes or processed potatoes into a foreign market, a strong dollar makes it more difficult for us to compete. Warmer temperatures, it was the other thing I talked about, how that's driving the overall trend, but it's a differential trend. It's not that additional heat we've seen over recent years has been beneficial maybe here in eastern Idaho, but it certainly has not been beneficial in areas like western Idaho or the Columbia Basin, where they've already had plenty of heat units to grow a crop. Those additional heat units actually become not only of no benefit, but at a certain point they can be detrimental and actually hurt the overall yield. Looking at those trendline yields, it's important for growers to recognize that if the markets for their products are not expanding, then with those yield increases on those trend lines, then they need to actually reduce the number of acres they plant. It appears to be happening that we're going to go back into a period of a little bit more stable, less volatile overall increases in input costs, particularly on the operating side, the seed, the fertilizer, chemicals, and those type of things. We just saw some huge, increases starting about 2007. If you look about the last 7 years, 8 years, that's some of the most volatile period we've ever seen, going back, almost 40 years in terms of input costs. And it appears to me that we're going to back into a little bit more a lot less volatile. I'm not saying that prices won't increase, but I think overall we're going to just see a lot less volatility.